futures here. We've got a big amount of data, earnings, everything coming out this week, especially for tech. Futures looking good right now. Dow futures up 41, but you've got Microsoft, Meta, Alphabet, Amazon, Intel. All these companies are going to be reporting for the second quarter. What are you expecting? I mean, these have been the stars of the market this year.
Yeah, some of the components of the Magnificent Seven. So I'd expect these big names, so Meta, Alphabet, and Microsoft, all to give us top and bottom line beats. But what I want to see from here is, number one, how does the market take these beats? Are they enough? So to me, the earnings from Tesla and Netflix were both excellent. And I thought the guidance was pretty good too, yet the market crushed both names. Are we in a short-term toppy cycle right here where the Qs hit an important level on Friday, that January 2022 level, so 18 months ago, and failed? After that, the NASDAQ sold off 30%. I don't think that's going to happen here. What I want to see, was there just a little bit of fatigue with those names, or are these names going to take the market higher? And then the second level with all these big names is the conversation about artificial intelligence. Is this going to keep going? Are these going to power their businesses going forward? That's been a hot topic since about 6 weeks ago. We got that spectacular earnings report from NVIDIA. We've yet to see anybody really follow that up with the same type of significance. So what are we going to hear in Microsoft's talk about? Microsoft talking about that, of course, the owner of ChatGPT. What does Google have going on the quantum computing front as well as the AI front? And what do we hear from Meta about this new Threads platform? I personally think it's going to be a dud, but
it's already becoming one.
Yeah, the stock has tripled year to date, and it seems like they've thrown out the ideas for the entire metaverse, even though they changed the name from Facebook to Meta Platforms. But the market is very impressed with that idea because, I mentioned it here before. I think the metaverse is nonsense. So it's good to see that Facebook has taken the same approach now.
Right, and Catherine, really quick, I'm going to ask you about the Fed, but for really cool hearing you, just to be clear, your connection's a little choppy. Hold on 2 seconds. Let me get that fixed. I'm going to bring in Mike Lee. Let's get his voice fixed there. Mike, jump in. Obviously, we were just about to talk about technology earnings coming out this week. Obviously, the Fed's a big story here, but kind of the same question that I just gave to him as we fix his audio. Like, what's it going to be? So,
look, everybody, including myself, thought we would be in a recession right now, but somehow we're not there. This was the most historic Fed rate raising cycle. Yes, in the early 80s, they raised a greater amount, but when you go from 0 to 5.5% in like less than 2 years, nothing like that on a proportional basis has ever been done. So how on earth are we not in a recession right now? So Jim was making the argument, and I've seen him make this argument, that the lag effect from these rate hikes hasn't kicked in yet, and the Fed should have been done a couple of hikes ago and just let their work do their way. And because of the shelter component of the inflation calculation, inflation's about to,
yes,
it's about to fall down dramatically just because of the lags in that. So from there, then we have this inverted yield curve, right? And so what the yield curve looks at, the 2s to 30s, which is probably 70 or 80 basis points inverted right now. What that is the market's expectation of inflation plus growth over the next 7 years. What's going to be the average of that? So when it's negative, that's implying that there is going to be a recession at some point, almost imminent. And that's what the bond market is predicting right now. Why haven't we seen it? I don't know. Maybe it's so much liquidity, $8 trillion into the economy. Maybe you should just never underestimate the consumer in America. Maybe, as Dan Ives has been saying, that this AI trend is like a 1995 moment with the internet or an Apple iPhone release.
All right, Jim, I understand that you're back. Respond to that if you can.
No, and I think Mike hit on something that's really, really important. The extra money that's been pumped into the economy. And he said $8 trillion. So let's just thumbnail it and say, we were growing the M2 money supply since 2008, huge. So of the $8 trillion that was put in, let's say that there's $3 trillion extra dollars of liquidity still in the market. I think that's what's keeping out of recession. That's what's keeping risk assets higher. And that doesn't seem to be being pulled out as quickly as we thought it would. So again, when 2s versus 10s inverts, it's usually 12 to 24 months before the recession starts. We're about a year into it. We're clearly in that window. So I am still on recession island. I think it's coming soon, and I think the Fed will pivot.
Recession Island. That sounds like a really good game
You like
show.
it? Right.